So
We're live.
welcome back, everyone. This is we're with the crowdfunding Tectonic shift in real estate investing panel. This is sponsored by NAR and NAR Second Century Ventures, so thank you guys so much. And we're here with Overtime. So to my left, let me introduce George Newbery, the founder and CEO of American Homeowner Preservation. To his left, we have Jordan Fishfeld, co-founder and CEO of PeerRealty. To his left, we have Gene Barash, VP of Business Development, Realty Mogul. And last but not least, the moderator of the panel you didn't see, Kevin Guy, CEO of Real Liquidity. So welcome, gentlemen. Crowdfunding. Let's talk about the basics. Who wants to take it and give the audience, the 30,000 foot overview in 30 seconds or less?
Yeah, sure. So what we're seeing now is basically the democratization of the investment opportunities. So much like you can now support one of your local businesses through a Kickstarter or Indiegogo campaign, through equity-based crowdfunding, which is what we all do, you can invest in an upcoming project for the first time, really. Which is fantastic. Really? So, and I'll just throw this out there, and not much, through the Jobs Act, which was passed, this has allowed crowdfunding for the first time to be actually done, because it was illegal before to do what people are doing now. Is that correct, George?
That's generally correct. Some platforms, such as Realty Mogul, were working with a password-protected site, which still allowed them to crowdfund even before the Jobs Act. But what the Jobs Act has allowed us to do is to generally solicit. We can advertise. We can freely talk to the media. I can tell you what our returns are. I can tell you everything. A year and a half ago, couldn't do that. Have an interview. We have, You couldn't give any specifics. Now we can. I think that's the exciting part.
And it might be, for everybody, why is that game changing?
Well, I mean, it's a game changer because of eyeballs more than anything else. I mean, you can create awareness. When the first deal that we generally solicited, Hard Rock Hotel, I think we got somewhere about 70 million in hits just by advertising it. So that amount of awareness just increases the capacity for the crowd to invest in these deals.
Right. Now, Kevin, I know you come from a little different place than the rest of these gentlemen from the with Real Liquidity. Talk a little bit about that.
So what we do is we essentially take crowd-funded shares in real estate projects, and we bring them onto our exchange and provide a second market to buy and sell shares in specific real estate projects.
All right, so you guys might kill me, this is a bad example, but for lack of a better term, is this like the public stock market and trading publicly traded companies on the market? So is that like buildings being traded like a publicly traded company on a stock market?
I think
something like that?
I think long term, today, that's not what it looks like. Essentially what you're doing is creating a market where people, if they're interested, they can buy it. Long-term vision, it would be like trading a stock. It would be like going to your E-Trade account and saying, you know what, I want a piece of the Willis Tower. I want to buy 10 grand worth of the Willis Tower, and I want to go to San Francisco and buy another 10 grand worth of another project. It allows the individual to diversify their investments. And so I think long-term, we're going to see, you're going to see crowd-funded shares trade like a stock. In the next year or two, I doubt it, but long term, I think so.
Very interesting. So let's go back to your platforms, or what kind of projects are you working on, or what kind of projects are being crowdfunded right now? Typical project.
There is a really wide array of projects. We've crowdfund the purchase of distressed mortgage pools from banks at big discounts, particularly in low to moderate income communities. We then help those families to stay in their homes with modifications or try to turn vacant homes, put them back into service. But I think you'll hear from the others. There's commercial projects, there's the Hard Rock Cafe, there's 3 World Trade Center, there's fix and flip homes, there's any type of real estate project at this point can be funded on a real estate
Wow, it sounds like
platform.
All and any in between. Can we talk about a couple projects? You mentioned one, Jordan.
Yeah, and we have an office building in the Loop, downtown Chicago, that's up on the platform right now, taking reservations. We have some other upcoming projects that'll be in both retail and in ground-up development with institutional level operators. So really, that's what we see with crowdfunding is it's a lot of different platforms and a lot of different assets, and really allowing the accredited investor population now to diversify their portfolio, but hopefully soon will allow for kind of everyday investors to diversify their portfolio. Right.
So just to break it down, you have a project and you say the platform. So somebody posts, I want to build this project or redesign this project on your platform, and then an accredited investor can come in and buy into the project, right?
Yeah, I mean, there's a due diligence process and a long legal negotiation process in between there. But yeah, that's exactly right. We have, operators that come to us with projects and say, we're going to need $5-10 million in equity. We're going to put up, X dollars. You can do Y, and we open that opportunity to our investor base and so that they can invest in this project.
Wow, that sounds pretty incredible. Gene, can we talk about a project you guys have done? What that looks like?
Sure. I mean, one of the projects I just touched on, the Hard Rock Hotel, 6 months ago or so, we crowdfunded the first hotel. It was a Hard Rock brand in Palm Springs, and allowed investors to, purchase a share of it, which was, really exciting, as opposed to some of the other properties we have. Self-storage facilities where people can walk down and be like, yeah, I own a piece of that locker. They can now walk into a hotel and be like, I own a piece of this, a little bit more exciting than a storage locker. So lots of different opportunities out there.
Returns are good on storage, so.
Yes, they are. Yes, they are.
Gene, did I hear that you got a free night stay at the Hard Rock Hotel if you invested?
Are we live? No. Won't disclose that.
So, talk about how, and we might have already been touching on this, but how is this changing for, the typical traditional way that people are thinking about real estate investing?
I think it changes it tremendously. I think, traditionally you would see an opportunity to invest in real estate was limited to, one, you had to know a person going up with a project. And two, as George mentioned on the panel that you didn't see, the minimum investments were anywhere from 50 at the minimum and really somewhere around that $250,000 threshold, or else, why spend the time negotiating the docs and doing the brain damage required for, a $20,000 investment. For us, we kind of take that control and give the opportunities to those that only want to invest $5,000, $6,000. I think you guys are a $10,000 minimum. $10,000. Yeah, it's the first time that you could really truly diversify your portfolio, because if you look at the average 401k balance right now, it's around $100,000. You're supposed to have anywhere from 5 to 15% of your portfolio in real estate. So how else could you invest in real estate for $5,000 to $15,000? This was it.
Right.
So this is truly now, for the first time, the only way to diversify your portfolio the way that industry experts suggest. It's beautiful.
And in fairness, touching on that, so someone wants to invest a portion of their portfolio. Historically, it's either invest in real estate or don't. It was going to be, hey, I'm going to buy a rental house or a rental property, and it's not just an investment. Now it's something where the tenant's calling. You have to find a tenant, you have to maintain a tenant, collect rent, fix a toilet, do repairs, and that's a lot of work, which a lot of people aren't prepared for. They usually can make more money doing whatever they made the money from in the first place. So I think these platforms all give these investors a very easy avenue into investing in a multitude of properties, and it also gives them the ability to diversify amongst platforms, amongst projects, whereas in the past you invest in one project, you invest $250,000 in a project, the project goes bad, that's not such a good situation. But if you invest $25,000 in 10 projects, then if one goes bad, that's unfortunate, but it's something that's maybe a little bit more absorbable.
Right.
Yeah, that's exactly right.
And the other thing I would add to it, the other traditional way to invest in real estate has been through REITs. So you can invest in funds, or you can invest in a REIT structure where you're spread out amongst a number of assets. But one of the key components that investing in equity real estate does on a crowdfunding platform is you get to take advantage of the depreciation expense, and that's a huge tax benefit that can offset your other gains on passive investments that before wasn't available if you invest in REIT structures.
Yeah, and I would go even so far. The investment in a REIT, in all statistical analysis, moves more in line with the equity markets than it does with the real estate market. And so you're actually not diversifying out of traditional equities when you're investing in a public REIT. Whereas now, through our platforms, you can invest directly into the asset itself. And what you'll see is when the equity markets take a little bit of a turn, the real estate and hard tangible asset markets tend to kind of stay strong. Tend to.
Right. Interesting. Let's talk about your platforms, the platforms. Right now, as I've been doing my homework, we saw 50, and now we've seen 100. Are they going to continue to pop out, or are you going to see a lot of Are platforms going to continue to offer all kinds of projects? Or do you think you're going to see more niche platforms come out that offer very specific type projects?
I think it's a niche project. So there's not the Realty Mogul or some of the big platforms that take a lot of different projects, I think some of those first to market have a big advantage to say, hey, we're now doing the same thing as Realty Mogul. It's a little late to the party.
Right.
But if you come in and say, hey, we're doing some niche, some whether it's hotels, whether it's in Austin, Texas only, something where there's distinguishes
Distressed
yourself.
mortgages.
Distressed mortgages, for instance. These are things where you can distinguish yourself and attract a more narrow market, but one that's more dedicated to you.
Right. Interesting.
Yeah, I would agree with that. I think there are a number of different ways to niche yourself, whether it be through geography, through asset class, or through your investor base. I mean, really, we'll see that. And that list of 75, I'd say, half of them are actually active in doing deals. So it's a little bit smaller than what we've seen. But I think there is definitely going to be a niche, and then there will be some sort of, aggregator out there that kind of takes all that information and puts it into one place.
Right.
Yeah, and I'll actually add to that. I think the other thing that's going to be important down the road is going to be the operators themselves. People are going to start following certain operators because they're successful. It's going to be a huge thing. It's a confidence builder for people. And, if, I don't know if the platforms are going to be using rating systems down the road, but, they're going to be able to see this guy, has lived up to his pledges, 98% of the time. So it's going to provide confidence, and I think people will follow certain property types for yield, but they're also going to be following the operators for the new projects that are coming up.
Right.
Right, and that really speaks to something we haven't touched on yet. It's the transparency that crowdfunding platforms provide. If you put your deal up on a site, that's on there forever. That's on there not just for the investors to see that invested in it, but that's on there for the thousands or tens of thousands of other individuals to see, forever. So how that project performs is going to be how you're judged by a very large group of people. So if it's successful, the logic would hold that people would want to invest with you, and vice versa if it's not.
Absolutely. Let's stay on the transparency thing, because I wanted to talk about, we have a bunch of different platforms. Is there any governing body besides, let's say, the actual Jobs Act and what rules, they're putting out there that, how you interpret them, right? That's is there any kind of governing body that's saying this is how you have to set up a deal, this is how you should set up a deal? Are you all setting up deals the same, differently? Is it totally on the operator?
I think you could pick an acronym, just put a couple letters together, and there'll be some government body that's regulating something. I mean, there's there's the SEC, there's FINRA, there's your local governments when it comes to lending laws. I mean, there's a lot of regulation. Real estate and securities are both very, very heavily regulated industries, so there's a lot of regulation.
Got it. So consumers feel protected. There is regulation. Got it. Okay.
Yeah, no, they definitely should. And I think we're starting also to see industry trade organizations kind of form and come out with best practices. And I think that's going to be important moving forward, trying to, as an industry as a whole, really, what works, what information is necessary, how should we move forward. And, my background was as an attorney, and so all of that kind of made sense going into it. And we're seeing form documents come out from CIFRA that this is really the structure that should be throughout the industry on equity transactions, and I don't think they have a debt form yet, which that we'll see. But yeah, there will be some sort of kind of standardization of what information is required, and then from there the transparency will allow for the investors to really go and focus and find their needs.
And I think you're seeing right now a migration of the platforms to affiliate with broker-dealers. So existing securities professionals who can help provide compliance cover, guidance, and policies and procedures that make sure that everyone is in compliance, because there are, as Gene mentioned, there's, it's Fed regulations, state regulations, there's a lot to keep track of, and filings that need to be done. And, you miss those. If anyone messes up, it's probably mostly just negligence. They messed up. They either didn't know or they missed a deadline. And those are really the worst mistakes because they're so easily preventable. Right. And I think those those alliances are coming and will continue, especially for the more mature platforms.
Got it. Okay. So, we've covered, I kind of like to tell things in a story. We've covered what is crowdfunding basically. We've covered some platforms, and it's, you have to be a accredited investor to get in. So I'm excited. I can finally get in and diversify my portfolio, as people have been telling me I need to do. I go to a platform. I find a platform. I do my research. I feel comfortable. There are governing bodies that are going to make me feel comfortable putting my money in. The big question, how and when do I get my money out? Anybody?
I mean,
anybody wanna-
George has probably.
I'm happy to take
Here,
that one.
Real liquidity. Here, go
I'm
ahead.
happy to take that one.
Yeah,
Guys,
go
come
ahead.
on.
Start with real
You
liquidity.
Throw me a big grapefruit to knock out of the park. No, I mean it's just a matter of time. It's right now, we're seeing a pickup in velocity. As crowdfunding gains traction, there's going to be more deals out there, and when those deals mature, by the very nature of the agreement that is drafted for these deals, there's going to be either a liquidity event or either those shares in those projects will become liquid on a platform like Liquidity, our platform. There might be another one, who knows. And so I think over time, once we start to see the volume and the velocity of these deals happen, people are going to have a more liquid market to, diversify and get out of these deals and redeploy their capital in new deals. I think that's what we're going to see over time.
How anybody want to respond to that?
I think right now we're seeing a lot of different ways to create liquidity. The main one I think is really having short duration investment opportunities, so that you could really see the success of the deal over an 8 to 10 month period, either through what Realty Mogul does or specifically with Patch of Land, which I think is probably one of the single family fix and flip industry leaders right now. But with I think the more lucrative and really more exciting projects are 5, 7, 10-year holds. And the nature of our investor is they're accredited, right? They have to be comfortable with this type of investment. And so we'll see, hopefully eventually the docs change and maybe some of the liquidity rules change. But for now, it's really, the focus is just picking the right deals. And then, through that hold period, you will have done what, you will have made money.
Right. Interesting.
Right, and we're talking about principal being returned. What we didn't hit on is, as you're investing in these deals, you actually get distributions or dividends. You get paid monthly or quarterly depending on the deal. I know at Realty Mogul, one of our big focuses is cash flow, and I know for a lot of other platforms it is too. And that allows an investor not to have to wait 3-5 years or however long it may be to generate some return. They're going to start seeing that paid dividends for them literally very quickly.
And it'll give them some insight into the performance of the project, because if those monthly dividends start to not come, then obviously that's something you'd want to know early rather than 3 to 5 years down the road.
Got it. When is this happening yet, or when do you think this is going to happen, where somebody, a traditional person who invests in real estate, right, a developer, when are they going to come to a crowdfunding platform first rather than their bank or their hard money lender, whoever gives them money?
I see it happen all the time.
It's already so it's already happening.
Yeah.
Wow, that's incredible. Okay, that's great. 5 years from now, where's crowdfunding going to be for real estate?
I think right now it represents a tiny fraction of the overall debt and equity raise for real estate right now. I think in 5 years it'll represent a significant chunk. Just like Lending Club and Prosper have taken out a large chunk of the personal loan market and are actually taking that market in many cases from banks, and sometimes banks are conceding it willingly and partnering with those platforms. I see the same thing happening here. It's not necessarily going to be the old capital providers just being beat out. They're going to form alliances and become part of, utilize this technology, utilize these platforms, and all the benefits that come with it.
That's great, and we're seeing that happen now, as you said. That's interesting. Yeah. Okay. 5 years from now.
Yeah, no, I would probably echo George. I think this industry becomes, the way deals under $50 million get funded. I think that at the very least is something that we see in 5 years.
I won't hold you a percentage to it, but what percentage of deals right now, ballpark, are you know what I mean? Where are we on that scale before we get all the way to the large percentage?
Low.
Low. No, that's a good. No, that's a good answer.
Yeah,
low.
it's
That's
low,
it's good enough.
and it's low. I think because the industry as a whole is 18 months old, and real estate operators themselves are not the most flexible, as I'm sure you're aware. But once we see, younger operators coming up and making a name for themselves and knowing about crowdfunding and having those successes early. And then obviously when one person does it in a group and makes money, and he'll start telling his friends, look, I raised money in 24 hours on PeerRealty or Realty Mogul. You guys should do this. You don't have to deal with JP anymore for a $25 million loan, which isn't cost effective at that size, right? So I think the sub 50 becomes very, very attractive in crowdfunding, and then the larger, really, really big deals up to 500 million. We'll creep in there soon. I don't know when it is, but it'll come at some level.
And I think you'll see it within all facets of just real estate finance. It just won't be real estate crowdfunding. It'll be in all aspects of it, whether it's niche markets, whether it's small deal sizes, big deal sizes, debt, equity, really across the board. And it's just going to, as it gains more acceptance and more traction, I think it's just a big snowball effect. So when we're talking about, as an industry, we probably did, let's say $50 to $100 million in business over the last year. That number probably 10 or 100-fold, 5 years from now. Wow.
Yeah, and it may even be higher. It may even be higher than that. I think this is going to fundamentally change the way we buy and sell real estate. I think today it's just in its infancy. If you look at the whole scheme of things, you couldn't see this from space if it was something on the planet. It's such. We barely scratched the surface.
You could see it from here.
No, well, that's true. We're on the 99th floor. I can't see it. Yeah, you're right. So. It's going to fundamentally change. I don't want to say it's 5 years because the government's involved and everybody else. I don't know if it's 5, 7, 11. I have no idea how many years it's going to be. But I can tell you in 20 years from today, this will be mainstream. It's going to fundamentally change the way we transact real estate. So the average guy, 20 years from today, he's going to be sitting on whatever device is the big deal at the time, and he's going to go, boom, I'm buying a share of this, and I'm buying a share of that.
He's going to blink his eye.
That's it. That's right. He's going to be wearing Google Glass and doing this with his Google Glass right here, buy, sell, there. Right? So, yeah, it's exciting. This is transforming one of the last big, asset classes. This isn't something new. Syndicates have been around a long time. So this is something different in the fact that everybody can participate to some level, and it's going to open up even more. So it's really exciting to see where we're going.
Okay. I'm going to end it on that. So that was great. So thank you, gentlemen. George, Jordan, Gene, Kevin.
Thank you.
Thank you very much. Crowdfunding. Look them and their platforms up and everything you can do with it. Thank you.